Perfect. Okay, let's start, and I'm sure that other people will join. So, very interesting week uh, this week. Obviously, we didn't have a lot of stuff so much happening in the markets, but our news are getting filled with trading all the time. Okay, so what I found very fascinating is that I always say everything everything changed and nothing changed. Let me just explain that. So essentially, you know, right now everybody's talking about the mob, right? The traders mob, like how people can drive short positions up, and or actually here we have somebody, Emil is from the Netherlands. He knows about the tulip, the first probably I would say hysteria for the market that happened over the tulips. A price of tulip went to as high as the price of a castle, a flower. That's what happened. I think it was one of the first times, right? So you have a mob behavior. However, today we also have mob behavior, but the difference is they're communicating with one another, right? So everybody is on chats and forums and everything else. And it's just a mob that just kind of moves together. And now they're able to communicate with one another. Before they weren't able to do that. Nevertheless, despite the fact that there's a mob, they still operate as hysteria and out of impulse and greed. And so the mechanics have changed, from the tulip days, with even the 30s, you don't have to go to the tulip days. Even if we had the crash of 1929, obviously there was a certain mob behavior. People were burning $100 bills, everybody was at the bar, and then the market crashed. But that's where they met, right? Their meeting place was the bars or restaurants or those kind of places. Now everybody's just kind of on the internet talking to one another. So everything changed and nothing changed. Everything changed because now you have the internet, so they're communicating over there. But nothing changed. So again, your goal as a trader is always to think independently. It is extremely important to think as an independent and individual person. I can't emphasize it enough. You will be swayed. I'm swayed too. But I always remind myself every day, stay independent, because you know what? When I started trading, there was a few chat boards on Yahoo, but it was nothing like it is today. It wasn't like millions of people registered on Reddit or other forums that have hundreds of thousands of people and communicating with one another, influencing one another. It is hard to stay independent, even for me. I'm also surrounded by this. I'm also reading through stuff. I also try to filter it, right? So first thing is to stay independent. I'm going to put a quote for you guys that I found here. If you just allow me for 1 second. This is a quote. Okay, let me see here. Okay. Trying to find it here. Okay, where was it? I apologize. Okay. Okay, those. Okay. Okay, so this is kind of a let me see here. Control F. I'm going to see if I'm going to find it. Okay. So this is a quote from Dickinson G. Watts. This is a quote that he did. I'm going to post it here. Just 1 second. This is what he said, that what it takes to be a trader. Okay, those are the qualities that you need. I'm going to put it in the chat. Okay, and he was Dickinson G. Watts was the head of the cotton exchange about 140 years ago. And it just tells you, how much everything changed and nothing changed. So here you have self-reliance, judgment, courage, prudence, and pliability, right? So what I'm going to do, I'm actually going to discuss each one of those. I'm actually going to put a quote on, Jake, if you can do a thread for me, call it trading quotes, your favorite trading quotes, because I'm going to post the whole article there, or at least what Dickinson said about each one of those. So again, it's going to be posted on community.optimusfutures.com. You can also post your own favorite quote when it comes to trading. Another thing I want to talk about trading, another quote that I found from David Nussbaum, and I'm going to read it. And this is what he wrote. Many traders are turning to psychological coaches, eager to find an edge on the unknown they can control. And then hyphen, their own behavior, which means everybody's looking for a trading coach to understand themselves. And this is what really trading coaches really do. Trading coaches make you understand what causes you to move in a certain way, right? So the reason that all this big intro is because I'm going to talk today about the mental state of mind of a trader and what you need to be in a good mental state of mind. Now, I'm not a psychologist. I'm not a psychiatrist, which means I don't have the credentials of somebody who studied it academically. The reason that I'm saying it is because I don't have any desire, to, how shall I say that, to get into the, psychiatric and psychological nitty gritty of the little details of what motivates us to do certain things. So those are very complex topics. I'm just going to explain it from my perspective, how I evolved. And if it helps you, then obviously it would be really fantastic. So again, it's really more from an individual that had to overcome a lot of things, and I'm still overcoming them. Markets are I'm never in the process of me waking up in the morning and saying, I know it all and I understand how the markets work. I don't. I'm just as good as I was yesterday, and something new is again tomorrow. You're getting into a business that you're evaluating the markets and you're evaluating yourself and be ready to learn. A while back, I wanted to share a story with you. This is probably going back, I would say 10 to 12 years. So I was in Chicago, and there was a bunch of people giving trading education webinars that I was attending. My main purpose was also to communicate with people and acquire them through communication and get customers. But clearly, webinars took over everything, and those seminars kind of, disappeared. But there was a lady that, and I'm not going to mention her name because I don't want to insult her or anything like that, or, she was a very nice lady. She gave a seminar about trading psychology. So she's sitting there and she's telling everybody, about more from an academic standpoint, because she was an academic. She had a degree in some sort of a clinical psychology or something like that. And she was talking about issues that traders have and everything else, right? And somebody raised their hand and they said, what do you trade, right? And she said, I don't trade, it's not for me, right? And at that point, I was really kind of disappointed. I said, all the way in the back row, I said, you know what, it's time for me to get a coffee. So I left. I would say probably, a few hours later and everything else, she saw me, she said, I saw that you left. She knew that I'm a broker. And so she asked me if you don't find her interesting or her topic interesting. And what I told her is this, I said, you really have to be in trading to understand the psychology of trading. You can't tell other people how to behave and what to do based on some sort of a model, right, of what you think it should be, and some according to clinical psychology or theories or things like that, because there's a lot of disciplines in life that you can't move from one to another. So she's trying to move some sort of a general theory from one to another. And she found we actually had a very good conversation. She really understood my point. So a lot of you are very disciplined in many areas of life. A lot of you are very successful. You've built things, and everything else. What I'm trying to do is really talk about the discipline that is in trading. Some of you were in law enforcement. Some of you were soldiers. Some of you have very successful businesses. Some of you have built things, families, and everything else. And it's an achievement. I wanted to tell you that's an achievement. Everything you achieved in your life, even if other people achieved it, did the same thing, it's an achievement. You paid off your mortgage, you're an achievement. You have a successful marriage, it's an achievement. And it takes effort and it takes time to do even for human things or to run a successful business. I'm sure that some of you have been in business for a long time, had some sleepless nights, that not everything was smooth. Maybe you were in between jobs. And so that takes discipline as well. So I just wanted to tell you, all of you are probably very successful in many areas in life. But in order to be successful in trading, it has its own state of mind. It has its own psychology because you're dealing with money. And for all of us, money means different things. It might sound, odd to say, but it is. And depending how you grow up, it's based on your religion, it's based on your culture, how your parents taught you about all kinds of things. All of those things will come out when you trade. And so, again, I'm not a psychologist, I'm not a psychiatrist. I'm just going to try and navigate you through feelings of trading and making sure that you're in control of things. Okay. So what I would like to start with is the saying, that what drives the market is fear and greed. And many times I always looked at it as a very, very bad thing, right? They say, that bulls make money, bears make money, but pigs get slaughtered. And at the same time, they also throw, what drives the market is fear and greed, as if all of us are, some sort of a greedy individual that always wants more and more and more and more, which you probably say about yourself, this is not the case. And they describe fear as almost being a coward or paralyzing. You're scared and you're paralyzed and you can't do anything. And I don't think it's true. So, especially when it comes to fear, fear prevents you from doing stupid things. It does. Fear could prevent you from over leveraging. It could prevent you from taking the trade that you shouldn't do. It's your alert system that says, you know what? Be alert. Be alert. Maybe this is not the right thing. Okay? Things have changed. Be alert. So you have to kind of to trust your intuition on that level. Now, again, don't take it to the extreme because a lot of people have the fear of trading. It's not money. A lot of people don't understand that. A lot of people who cannot place trades, I know as a fact that if they lost, $1,000 or $10,000, it will not affect them, financially, but they still don't place the trade because they don't like uncertainty. It's just not in their DNA to do that. So, there's going to be a lot of sayings out there and a lot of phrases. Make sure that, if it's a cliche, it's just another one. Understand what's really behind it. And I had to think about, fear and greed. Fear, in my opinion, is again a good thing. It will prevent you from doing stupid things at times. And I want you to be scared sometimes, because when you're really, really greedy and you're saying to yourself, I'm trying to recover, a loss that I had with a lot of contracts, then the one thing that then the fear comes in and says, I can blow my account. So I'm going to try and build it up. That's fear that was constructive. That's fear that, God gave us for a reason. It's in your DNA for a reason. It helped us. And now, all of a sudden, all those things that helped us shape who we are as a human being, other people say when it comes to trading is bad. Not everything is bad, right? And especially fear. Okay, so now that we said that, what I want you to take notes of, okay, is let's go through the process, some sort of a mental process here of what you have to think about, okay? Um, when you, well, it's not so much thinking, it's rather, let's call it what it is. Let's go through the process, the mental process of trading, and what you need to do in order to understand all those things. So there's a bunch of stages, right? There is the stage that you don't trade, right? You don't trade. You have to record how you feel when you don't trade. If you traded throughout the day, you did the analysis right after, and now you shut off the computer, write down, how you felt. Let's say 2, 3 hours go by. Write down how you felt when you did not trade. Did you think about the markets? Was it occupying your mind? Were you worried? Were you able to clean it out of your mind as a day trader? And by the way, futures is a very leveraged product. And I just wanted to mention there's a substantial risk of loss in futures trading, and past performance is not, indicative of future results. I should have said it in the beginning, but it's there now that we got to it. Okay. So when you day trade, again, the first thing is just be sure to understand that, this is something that, to be aware of. Why? Because the way you feel when you don't trade will affect the way that when the market turns on, it will affect your trading. It's important to, to have an observation, whether you were, indifferent or you liked it or you're hesitant. Again, you're starting to learn about yourself and you're going to be your own coach, right? Then the process of gathering data, right? This is the process. You go into the market, you turn on the computer, and now you're gathering data. And now you have to think also, again, what is the process that you're going through when you gather data, right? And this is extremely important, okay? When you gather data, you want to be objective. This is the most important part of the mental state of mind. You don't want to be long the markets. You don't want to be short the markets. You don't want to be biased. Nothing. You're just, a blank piece of paper. This is what you need to do when you gather the data. Otherwise, a lot of bad things will happen. First, you will find that the things that you want to find. That's the confirmation bias, right? So you'll start distorting what the market tells you in favor of what you want to see, right? You want to see that the market sunk and now the market has to bounce. And now you're going to gather data that will justify that, right? So gathering data is very important. It's the part that you actually do not jump to conclusions, okay? So that's extremely important. Okay, now you're going into phase one of after you gathered your data, okay? After you gathered your data, what you want to do is basically then you get to the trading side. Now, before you get to the trading, okay, I want you to think of something in nature, okay? Think about the fastest animal in the world. The fastest animal in the world is a cheetah, right? It can go after every prey that it wants at amazing speed. Nevertheless, before it hunts, it scatters the area. It follows its prey, right? It does its homework, the tactic, just figuring out the tactic, and then they go for it. Trading is really not that different, right? So a cheetah is not an impulsive animal. There's a lot of A kitten could be, when it wants to hunt for a bird, but not a cheetah. It has one chance. They know it, right? Because a gazelle runs pretty fast as well. Maybe not like a cheetah, but it can also escape. So they still, they gather all the information. Gather information. It's important. Then you have to make a decision. Okay. Now you have a decision. You're either long or you're short or do nothing. That's also a decision. But let's assume now you're gathered all your data and now you decided to go long. Now you have the implementation part. What's the implementation part? Do you enter the market? Do you wait for a breakout? Do you wait for a certain low and a support level to hit? That's the implementation part, right? That's the next step. When you are in the implementation part, you place the order, and let's assume the market gets executed, okay? Now you're long or short, whatever decision you did after you did your analysis, right? Now you want to monitor. You monitor your position, right? Now, again, at this point, what I do, if there's a position in the market, what I do is, how shall I say? Okay, I'm trying to think how I feel about this position. Now, again, listen, I'm not trying to make you into Sigmund Freud, right? My goal here is not for you to be, in this deep psychological state that you have to be conscious of every thought you have. This is just a very general guideline for you just to observe. But nevertheless, what you want to do is monitor the markets and you want to monitor yourself. And you have to ask yourself this, okay, what is this position doing, right? What kind of effect does it have on me, right? Not what it's doing in the market. That's not what I'm saying. What kind of effect does it have on me, right? Am I hesitant right now? Is it an easy position to carry? Is it a hard position to carry? Now, for me, I would say if it's a hard position to carry mentally, I would say that this is probably not for me. If it's really, really hard, it doesn't necessarily have to hit a certain target that I decided in terms of risk management, but I am conscious of, okay, how am I feeling now? Now it's in my DNA already. I don't even have to think about it anymore, which allows me to make decisions really fast. And I don't care, if I made the wrong decision. Now, what does it mean I don't care? Of course, just like everybody else, I want positions to win. But at the end of the day, I don't care in terms of if I believe in a certain belief system that I have, in the long run, it will only help me. Not on every single transaction, because it's bound to happen statistically that sometimes I thought something I'm completely off and I was right, and you get out and the market will do. But that's the part you shouldn't care, and we'll get to that, okay? If the market, for example, is easy, then I carry the position, right? It's easy, you just say, okay, you know what? It's a little bit down, it's a little bit up. It's easy. It is what it is. Those of you who were on last week's webinar, I discussed also the time length that you're in the trade. So I'm going to relate it here. If I think the trade should take 20 minutes or 3 days, at that point, I also have to decide based on the time frame that I traded. But nevertheless, if it doesn't do anything to me mentally, then I leave it alone. Now, clearly, your size, the number of trades that you have placed, the number of future lots that you have placed, the higher the leverage, the more risk you take on yourself. So it's starting to affect you. So again, having the right size is obviously very important. And if it's easy, you just carry it. If you reached your profit, you take your profit. That's it. It's done, right? It's done. You move on. You don't care what happens after. You don't analyze. You don't look at what the markets did after. There is nothing good that will happen after you exit, okay? Nothing good that will happen after you exit if you overanalyze. You can observe. It is fine to observe, You can say, you know what, every time I take a trade and I price those targets during this volatility, you know what, the market continues way, way, way above what I expected. Okay, which is fine, you know, and then you can say to yourself, but you cannot live with regret. Don't go into the should have. It's depleting mentally. It's just depleting. It doesn't do anything good. It doesn't help. So, based on that, just so you know. All right. Fifth element. Fifth element is the exit element. This is when you're wrong. This is when you run to the emergency and you say, you know what, I was very, very wrong. Now, I believe that if the position is in a profitable state, the minute you entered, you did something good. If it starts going in your favor, the minute you get in, which is very rare in futures, by the way, it's very, very rare. But if you got in and the future position is going in your favor right away, it means there's something there that you picked up. And if you remember in last webinars, I told you, it means for me, a profitable trade is a trade that you exploited an opportunity in the market. It means the market is, it doesn't mean that the market can't turn around. You know, anything can happen. Like I hope that everybody is intelligent enough to understand that I'm always talking about odds here. And again, past performance is not indicative of future results. But in my opinion, if it starts going in your favor, it should put you in a calm state of mind. You're saying, okay, I can operate this. You should be in exit position if it's not going in your favor right away. And that's where you have to be alert, right? Also of your state of mind at the time. If it's not going in your favor, you have to exit. End of story, period. You decide on the criteria. You decide on the criteria that makes you exit the market when you're wrong. Okay? Now, that is very, very important, the exit, because again, this is where the fear should come in. What if I keep on holding this position? How long I've been holding this position? So you're evaluating. You're not putting yourself in a state of paranoia. You're putting yourself slightly in the place of fear, where now you're asking yourself, should I completely abort this position or should I carry it, right? And if you're still, there's nothing wrong feeling a little bit of fear at that point. But if you have to exit, you have to exit. You get out, done, that's it. One thing which is really important, day traders should stick to day trading. I'll explain. If you're a day trader, then what you need to remember in all of this is that many people carry positions overnight from day trading because they hope that the position will come back in their favor. That is the biggest mistake that you can do. The biggest. Because if you're a day trader, stick to day trading. If you're a swing trader, stick to swing trading. If you're a day trader and you left a position overnight, it's only going to drain you out of energy and watching it and missing new opportunities in the morning or when the market reopens. And it's important to conserve your energy. You cannot have it in a depleting. You don't want to be in a state of mind where you get depleted out of energy. One very smart sentence that a guy by the name of Hank Pruden said, and I'm not sure if I'm quoting it correctly, but the essence is there, right? He said successful trading is 50% risk management and 50% self-control. Maybe the percentages were different, maybe 70, 30, 40, 60, whatever the case is. But from what I recall from my head, because it kind of stuck with me, successful trading is 50% risk management and 50% self-control, which is really interesting because if you think about it, nothing here talks about predicting the market, right? So that's basically it, right? Remember that. One thing I wanted to tell you that this is the part where some of you who, like many of our customers, taking mentors out there, right? So they hired people to they hired somebody to teach them how to trade. Many times those attempts, and I don't blame anybody. Look, I also have people that I resort to that I need help with business and life, and I also have coaches and everything else. But in trading, it's in particular really hard for a trader to transfer an idea to another person. And here's why. Your focus, your focus should be during the analysis period, which was stage 2, right? Stay objective and look for low risk trades. This is what you have to look for, low risk trades. There are no trades that are guaranteed. That's not going to happen. But what you want to look at is basically at odds with your method of how does the market behave with the method that you have at play that gives you the highest chance of success with the lowest level of risk. This is why mentors fail. Mentors, nobody says that. It is amazing. They will teach you support, resistance, and this and that, and how to look at the dome, and Fibonacci, and Elliott wave, and the whole, but they don't teach you that within all those things, if you get 10 signals, you got to look for the one with the low risk trade. This is what you have to do. And this is in the analysis part. So you don't just trade for the sake of trading. You're looking for, that low risk trade. This is the odds. You're looking for odds. Again, you're not looking, I'm not talking here about predictions. Trading is not about predicting the markets. It's about odds and chances. One of the things that I believe that majority going into the future of millennials will lose a lot of money is because they're used to a lot of chats. And in the chats, that you have this mob that influences one another, and this is where you have to stay independent because they don't understand the idea of during the analysis gathering, looking for low risk trades. Now, I know that when you're in the market, and you're watching everything, when you're not in the trade, I'm not talking about going to the library and doing research. That's not what I'm talking about. But you still, nevertheless, in a 5-minute time frame, in a 10-minute time frame, in an hour time frame, you have to look for those trades that will give you that low risk trade. And I'm saying it with, again, legally speaking, there's a substantial risk of loss in futures trading. I don't even want to imply in anything that I say that there's something that's implying even a chance of profit. Legally, I can't do that. But this is a belief system that I have as a trader, that you need to look for low risk trades. From all the successful traders that I talk to, they don't mentor, they don't give classes, they just do it for a living. This is what they told me. They just scan the markets all the time for that specific setup that they like, for that volatility that they like, and they utilize it that way, right? Some of them might find this opportunity every 15 minutes. Some of them might find it every 5 minutes. That I don't know. But nevertheless, they stick to that. I'm going to open to questions one more time. Shortly. Okay. So again, in conclusion of all this, okay, before I open to questions, what I wanted to say again is this. I wanted to repeat the stages. So you have the stage of no trading. You have the stage that you gather the data, and that's your analysis. Then you make a decision. Once you have a decision, you implement the decision based on the order. That's the strategy. Implementation is strategy. For example, you'll see something trading, let's say the mini S&P at 3,800. You're saying, you know what? I think the market is strong. I think it will be stronger if it breaks 3,805. So you place an order only when the market breaks that. That's one thing. Then we spoke about that you have to monitor it, you exit, and if you profit, you profit. And Also, at the same time, the last stage is the exit when you're wrong. And and you have to think through every single one of those stages, right? And be conscious of it. The exit part, which is really the part that we don't like, this is the mental part, right? Every single one of them, you think about that part. Here's what I want to tell you about losses, right? So I truly believe that we're very habitual creatures. And I think when we introduce certain things to our brains, I think this is what they're attracted to. I would say work twice as hard on profitable days and write down twice as much as possible, right? And because what you want to do is get your brains getting used to success and thinking in terms of the patterns when you did things right. When it comes to losses, you also have to think, but don't think more than what you had when it came to success. Because let me tell you this, if you lost, okay, if you lost on a certain trade, the only thing you have to be concerned with is the process that you went through. Were you going through an impulsive process, or did you go through the process here of mentally and strategically implementing it? Did you gather your data right? Did you think about the trading decisions you want to take, how to have strategically? Did you think about it while you were in a trade, and how did you exit? Again, markets are not about predicting where they're going to be. If you had a losing trade and you follow all those things to the best of your ability, I believe you're taking the right step. You should be concerned if you lost out of impulsiveness, if you got excited, the market moved, right? Because some people, they trade like that, right? So sometimes, I get an email from a guy who says, I want to close an account. I'm like, okay, it's fine. Listen, you have the right. But, I got with him on the phone somehow. He called me that day and he said that during, the call, I think I mentioned in the last webinar, he called in and he said that, he thought about trading because now he works from home. So he wants to trade as well because he's just not going to the office. I said, okay, so now COVID is over. That's it. Like, okay, fine. Listen, I'm not going to force anybody to trade, of course. I don't want to. But at the same time, the motivation to start trading was completely wrong because he wasn't successful, clearly, because he got up in the morning. And many people are like that. Oh, I'll look at the market. I'll see what it does. I'll make my decisions. But then what happens? You open yourself up to feelings. All of a sudden, 9:30 Eastern time, NASDAQ is running like this. And you're like, okay, listen, the trend is still up. I'm going to go long. Based on what? I don't know. It's just this is impulsiveness. I'm not saying you shouldn't go long. If your method told you to go long and the night before you prepared to go long, go long. But I'm trying to replace process. Have you in a mental state of mind thinking about the things that you do. Okay, final things. Again, I went through the process, the mental process you should go through and think about your trading. Avoid thinking about your losing trades. It's depleting. I'm going to say it again, it's depleting. You know what? It is what it is. If you think you were impulsive, just change it. If you follow the process, you follow the process. A lot of people feel really guilty when they lose money, but they think sometimes they did something wrong. It's not always the case. Sometimes you do your research, you do everything, and only you know if you were impulsive or not, right? You know what I do sometimes in my mind? I try to replay the situation. This is what I do. I try to replay the situation sometimes in my mind when there's a trade, especially when it was not a good trade. What are the choices that I had at the time? What choices did I have at the time when the position did not go in my favor? Did I have any choice? So my motivation is important. This is what I replay in my mind. Did I have any choice? And what options did I have? What options did I have while I was in the trade? Not options and isn't the instrument, but options as far as trading, right? My options. What did I have at the time? Did I have the option to flip to a different, to flip the position? Should I have flipped the position? Obviously, if you lost, you always think you would, but I don't judge it that way. I was like, okay, did I have a signal that was different? Did I obey my own rules? What outcome would I have had if I did something else? What outcome? Sometimes the markets is like this, right? It's just an impossible markets. There's healthy volatility and there's unhealthy volatility. Majority of people who trade don't have $1 million accounts, right? So if there's something that's very volatile, sometimes, okay, if I was stopped out on a trade, then I'm thinking, okay, if I stood in the other way, would it be different? No. In this situation, no, it wouldn't have been different. So I don't kill myself over it. I don't sit over it, and I don't, just don't dwell on it or anything like that. Guys, just remember, I should have said in the beginning of this webinar that this is recorded. So you will be on YouTube. If you don't want to be, email me and we won't post it, but legally I had to say that. So just so you know, we do post those on YouTube. So people could see them and you could see them as well and go back to them because I want to have series of education. Okay, now, where is the thing that okay, so I want to open up to questions. So by the way, we took care of our first winner today. I called. I know, thank you. Thank you for your patience. I know that all of you who posted, 500 words plus or approximately, you are getting your books this week, right? I'm sending it to you. We're going to gather the address. We just had a very busy week. So having said that, I also want to do another thing for you, and then I'm going to open up the questions. We did a thread here. If you go to the community site, it's what's your mental state that you trade, okay? Here's what I want you to do, okay? In the next 30 days, and I'm doing it for a reason. I want to make you work. I really, really don't want to be easy on you. I really want to make you work, but I also want to reward you. I have here a little success journal, okay? I'm not going to open it. I'm going to show you what's inside, but it's a daily successful journal, okay? What you need to do between right now, that's today, 11th of February, and March 11th, is to go in every single day and analyze your trades and how you felt during the trade. What process did you follow? I don't want to know if you made money or lost money. I don't care. I do not care. That's not the goal at this point for beginner traders. The goal is to know what process you went through like this, okay? Through those 5 stages. When you didn't trade, when you did the analysis, okay? When you took the decision, when you implemented it, and when you exit. Tell me exactly the state of mind that you were in. And there's a bunch of state of minds that you can have. You could have been, how shall I say it? You could have had fear, or you could have been overly cautious, or you could have been overly aggressive, or you had maybe the fear of missing out. And it's fine if you go through that. After the trade, you will know. Usually, we're better at analyzing ourselves after the trade, not during the trade, right? And also, when you are gathering information, do you think you were objective? The more you write of the process that you went through from the time that the market opened and to the time you actually took and executed, it would be very good. Every single one of you, if you're committed to writing it on every trading session, that from now until March 11th, each one of you will get the success journal. I love the success journal. It gives you the ability to do every single day. It gives you the ability to set goals, and you should have it, okay? And I use it, and you definitely should use it too. Not going to open it. I want it to be a surprise. It's good. It's not expensive, but it's really good. And it comes in a really nice box. And if you get it from Amazon with that smiley box, boy, that's addictive. Boy, if I don't get my smiley box from Amazon, what a bad day that is. So that's basically it. Now I'm going to take uh, questions from you guys about this. If you want to tell me about anything, or just or basically ask me anything, I would be happy to or listen. If you disagree on something, it's fine too. Listen, I'm here. I'm open minded. I wanted to help you as much as I can. So let's start. Any questions?
Hey, Matt.
Yes, sir.
Hey, I don't know if I asked you this before, but do you know Brett Steenbarger?
Of course. He's
Okay.
phenomenal.
Okay. Because I know I asked you if you knew Scott, um, but Brett used to work at Kingstree, and um, I would meet with him on a regular basis, and he really helped, the traders there, um, kind of guide you in a way to realize that, the market is what it is, and it doesn't care about what your emotions are, what your needs are. It just is what it is. And it's not, like you said, about losing or winning. Um, it's about observing it and taking advantage of the price differences or the mispricings or where the herd is going. And, I think that ties in well to your quote of, as a trader, you should be lonely. Um, and, the way that I relate that to the way that I think about trading is we all have the same, ideally, we all have the same information. So the question is, how do we as individuals process that information so differently? And why do we process it differently? Um, and I'm going to be doing a video on this, but when it comes to order flow and, you really looking at the granular data coming into the market and making the market, not trying to look at any moving averages or charts or levels and just focusing on one thing and being intently focused on that, you can learn and you could trade probably like that. If that's how someone learned how to trade with no charts, just numbers going in and out of the market, that's, they could trade that way, that they'll see patterns over time and, make decisions based on that information. But looking at that and breaking that down granularly when or in a more granular level with all the fluff out there and all the distractions, as you said, can be hard. So yeah, Brett's book, The Psychology of Trading, is great. But I'm going to be doing some videos on like order flow and just really granular stuff that is has been helpful to me over time.
Well, first of all, thanks for sharing, Ben.
Yeah.
Jake was kind enough. We actually posted here on the link an interview we actually did with Brett Steenberger. So I
Nice.
know him. He's a very kind guy. He came on the show. I spoke to him. He coached a lot of people. He was with hedge funds. The one thing that I do like about Brett Steenberger that he's also a trader. So again, this is not just a person who tells people how to trade. He really understands it. Again, he approaches it more from very academic standpoint. He has the degrees, he has the credentials, uh, and I've read many of his books, and not many of his. He doesn't have that many books, but I think I read two of his books, and it helped me. And when I spoke to him, and I went through the process, it definitely helped me. Nevertheless, I have to go. I'm that kind of an individual that decided I have to do what's right for me and my personality. To so I don't always relate to everything. I don't treat anybody as a guru, and I don't look at books or anything else that people love as a Bible. But there are certain things that he said out there that are absolutely golden, and definitely worth the read, or at least listening to this interview. As far as your question of why we interpret things differently, that's a hard question. I don't know. But the reality is that there are people that are perma bears, Peter Schiff, for example, one of them, pretty known guy for this gold and everything else. And, if you listen to him, the world is coming to an end every day, right? So maybe if you were fired from your job because of Corona, or you can't work, or you were laid off, God forbid, and you can't support yourself, and you listen to somebody like this on TV, then obviously, yeah, I mean, you think that the world is just, it's the end of the world. And then you can have somebody who just made a transition to work from home and everything is good. And then he listens to somebody who says, you know what? We have the highest savings right now in the United States that we ever had. And he says, okay, so we create biases by our circumstances. We create biases because of our financial situation. That's basically what it is. So sometimes where you're at a low point in your life, you might think one way, and when you're at the other, you might think completely different. And obviously that affects your analysis every day. So even if you do this granular analysis like you do, and you do a really good job on order flow, and one day I'm going to do a webinar with you here, because I really want to I really want to teach people what you do. It's not necessarily because I want them to always adopt it, but it's just an interesting thing to think on a micro level. But even when you do the micro level, if in the back of your mind you think the economy is tanking, then you're going to start looking at granular data that will tell you that this is, tanking. And if you think everything is great, and listen, all of a sudden, you get some financial reward from somewhere, or you found a client that paid you with a really, really big check, and you're really happy that day, and the market is up, maybe you start thinking, that the market is going up. So, and that's the hard part for everyone. And I'm not saying I'm immune to it. It's easy. I always tell people that what I teach other people about are the exact same struggles that I go through. I went through those struggles. Good people along the way told me, people guided me. I've read books. I've did my homework. But don't think for a minute that I'm always neutral and objective. I'm not. Listen, I live in a state, for example, that everything is open. Everything is open in Florida. It's just, yeah, people put masks and everything else, but everything is open. It has been open. There could be somebody who lives in Manhattan or in Chicago or in downtown LA where everything is closed. How could we not develop a bias? How could we not? It's just, you go to the streets and you think, and all you see is just empty stores. One of my clients is from Canada, in Toronto. One of the longest streets is called Yonge Street, and it's all boarded up. So the whole street is just boarded up. I lived in Canada. I know that area, and obviously somebody who looks at that will develop a bias, because he'll think the economy is it's horrible. But he might come short the market when the Nasdaq is making new highs all the time in the S&P. So I don't blame people for developing bias. But like you said, the market does not care. This is where you have to basically every day, based on your circumstances, stay objective. Look at the market, you follow your plan, and you look at granular data, keep on looking at it objectively, right? No long, no shorts. Yes, Evan.
In the military, there's a thing called, when you're a commander, there's two things. There's the art and then there's the science. Okay, there's the science. These are all the charts, darts, all the things that go into educating yourself. And then that's the science. And then you have the art. That's the implementation. That is the most difficult thing, because everybody can get the same data, but not everyone is going to implement it differently. And what I hear and what I'm understanding you to say over and over again, Matt, is that you've just given us a process. That's the science. Okay, you've given us these stages. Okay, but the thing is, how you implement it, that's your method. If your method is not right for you, find a new method. But if it is right for you, then look at implementing that method better, or you're analyzing yourself. One of the most difficult things that any one person has is self-analysis. Analyzing yourself and being critical, not in a judgmental way, but really looking at what you've just done and saying self-improvement is the goal. So therefore, if you're self-improving yourself, you're going to look at yourself objectively and say, you know what, I can do better now because see, to get less emotional is that you just become more indifferent. Okay. But you're indifferent because you're willing to take a loss because loss is a part of the process. But what are your limits? Is it 1 point, 2 points? Is it $1,000, $10,000? Whatever it is for you, that's your level of exit. Okay. And the same thing on profit, just like you were saying, it's your method. So you're happy with what you get because you're always going to find that there's going to be opportunities for better growth, better trade. Well, just be satisfied. There's a great deal to be gained from being content. So you have the art and you have the science of your trading.
I agree with you 100%. By the way, thank you for sharing your post, Evan, on the community site. Evan shared that, he suffers, from his dyslexic, or he was dyslexic at his childhood, and nevertheless, he had such a remarkable Army career. And it just tells you that you can overcome everything. When I was a kid, and I'm going to talk about for a minute about that, when I was a kid, I had ADD. I still have ADD, but my parents thought that I'm just, not listening and I'm wild. Every teacher complained. They said, your son is not here. He's just not here. He does not care. That was their interpretation, right? So it's how lucky we are that today, we're so conscious of those things. Back to, your point of art and science. I 100% agree with you. A lot of the stuff here that I say, it's the blueprint. But in order to have any implementation of anything, you must have a blueprint, and if the blueprint is not exactly right, then along the way you improve it, but you have a reference point. Think of people that all of a sudden need to fix an economy like 2008. You can't fix it without a blueprint. If things don't go right along the way, now you go back to the process and you improve your process. And you know what? In a few years from now, you might have a completely different process from where you started, completely different. But at least you have a process, and at least impulsive. And I wanted to tell you this, the reason that what you want to do is to have a process for what I mentioned. And then you can develop your own. I'm not saying that mine, maybe like, Ben mentioned, maybe, Brett Steinberger has a better process than mine did, what I mentioned. But here's the thing. I've learned to think in life and in trading about the one-off. That one-off event, that horrible event like we experience every few years. Like we had, I think, on February 5th, 2018, where the Dow, dropped, I think, at 4:15 Eastern, like close to 2,000 points in less than a minute. It was horrible. I mean, if you were short, that's just a lot of money. Think about it, $10,000, just one contract, almost. And, Mark says flash crash. It could have been a flash crash. I'm not sure. I know in 2010, there was a flash crash, right? And the reason that you want to have a plan is for that one-off event. It will happen to everyone because we have two things right now. We have machines and we have humans. And machines panic and humans panic. And machines, when they panic, selling programs, they trigger, really fast. And as we go into artificial intelligence, I believe that those fluctuations could be even wilder. And when you're caught in a situation like that, you know what? If you have a plan and you thought about it and you think about the entire process, you will exit. Otherwise, if you're an impulsive person and everything you've done in the market was always impulsive, you're going to sit there paralyzed, which could potentially put you in a deficit as well, right? So definitely. Okay, so let me read a few comments here. Okay, so John says, price itself is a perfect example. People different view on information. What one person views as expensive will not be the same as others. I agree, 100%. I've learned over time that I don't mind buying high. I don't mind buying high. I'm going to have a webinar one day about this whole thing. I mean, the process of actually how crowds and professionals view prices. What a different view that each one have on what's cheap and what's good, right? But think about it as an auction, right? The market goes high, 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 high. And an amateur, and a beginner, and I'm not blaming, but he says, okay, maybe this is too expensive. But it's like being in a car auction and there's a beautiful car and they auction it for 30,000 and now you're hesitating and somebody says 50,000, and all of a sudden you say, okay, I want it at 60. You just bought a higher price. And that's what professionals do. They buy highs, right? So you're right. Different people will interpret prices a very different way. Somebody said here about relationship with money and our upbringing develops subconscious beliefs and opinions. Yes. I've spoken to people before that came from a very religious background, and in their families, it was taught that money is bad. It's very, very hard to come with this kind of a belief system to trading. It's extremely, extremely hard. Let me just explain something, how cruel this business is. When you make a profit, somebody lost. Get used to it. Your job, okay? Actually, you know what? I'm going to read to you something that I actually found on the Reddit, okay? And this is what he said, okay? Okay. This is a guy who just went on and on and on and on about this thing, but this is what he said, which is very interesting. We're not in this together. I literally handed one of you a bag to hold this morning, and even if they go up for another month, eventually that bag going to be heavy, and I ain't coming back for it. I ain't tipping you either. And, when I read this, it just told me the reality of trading. Your job as a pro and becoming a pro is to hand somebody a very heavy bag that they cannot carry. As cruel as it may sound, that's your job. Your job is to be in a position that the other guy will panic, that the other guy will scream while you're sitting and you're doing this. This is your job. And it's the reality of the market. So a belief system, some people say, this is what I really do. Do I take money from other people? Yes, you do. You're not stealing this money. You're taking it with skill. You're not stealing it from anybody. This is why it's called an exchange. It's an exchange of ideas, an exchange of positions with a zero-sum game. That's what it is. Somebody's long, somebody's short. With the exception of transaction costs, it's a zero-sum game. That's what it is. If somebody wins, somebody loses. Your job is to take the money from the other side. I'm always trying to figure out is this. What do impulsive people do? How do I take money from impulsive people? How will they behave in that situation? When the market is going up, they will panic if they're short and they'll sell right away, which adds to more buying pressure. If the market is going down and it's tanking, they're going to panic, which will add more to selling pressure, and more and more and more and more. At some point, the cycle stops, of course, and I can't max out the move. But this is what I'm also trying to figure out on the psychology part. What is the other side doing? Evan, you know it more than anybody. Listen, you go to war, there's an enemy on the other side. There's just like same kind of person, just like you, with a family, with kids, with everything else, and all of a sudden, both of you in an unfair situation. But you have to survive. There's nothing you can do. It doesn't say anything about you as a person. You didn't kill a person on the street. You took a gun to war. So belief systems do go a very long way. And the fastest, and especially in the futures market, I really believe that more and more and more amateurs will come. People who are not prepared, who want everybody to hand over the secret formula to them. Give me the perfect indicator, give me the perfect moving average, give me the winning setups. I'm not saying that people doing it because they're cruel. Because they're lazy. But they will realize a very cruel reality if this is what they're going to be looking for. And this is why you're the Zimbabwe Warriors. You are going to develop a process that nobody else will do. You will do more homework than anybody else. You will prepare yourself more than anybody else. You will be influenced only by good people and decent people in your life who really want you to succeed, right? And an entire forum, you know, is consisting sometimes, you know, public forums and trading. I've seen people that literally started trading 1 month and they tell everybody else what to do. They tell everybody else what to do. And sometimes a person who's been trading for 2 years sitting there and thinking, did I miss something? Because I haven't been doing that. So what you want to do is really be independent thinkers. Okay. Somebody said you spoke about low risk trades, only trading the S and Q. Do you think that diversification without a future will increase that goal? So what do you suggest? For example, on the indices of commodity, a certain correlation, you know, find the instrument you want to trade. You know, this is something I can't advise. I mean, because for every person, it will be very, very, very different, right? Sometimes you'll feel more comfortable. You know, today I got an email from somebody who said, listen, I love trading the treasury bonds. I love it. I should have switched to this a long time ago. Okay, so isn't treasury bonds, that's what you feel comfortable. If you have the ability to have a number of commodities and you think you can exploit mispricing with your method in a number of them and you're patient enough, go for it. Do I think diversification helps in itself for the sake of diversification? No. I don't think if you come to the market and you say, if I trade 10 commodities, I will be more successful. No, I don't think so. I think that if you find an exploit in 2 markets, 3 markets, 4 markets, fine. But if you can exploit more opportunities in just 1 market, instead of focusing on 10, then, you know, because you're not distracted, maybe that's better too. So again, this is very, very individual, right? So, okay, somebody's talking about today. I think it's a stock, SNDL. Okay. Okay. So you said you're trading against it. Hey, listen, if you can interpret the data, that's fantastic. This is what I mean. Listen, you know, somebody mentioned here a stock and he says, you know, you're trading against somebody who buy a certain flow, right? Okay. Well, listen, now you know. Now this is the side you don't want to be up against, which is great, right? Okay, I am growing to disagree with the idea of markets as being zero-sum game, especially in the futures and option markets. Okay, that's fine. Listen, I think here's what I think about the zero-sum game, okay? There could be days that one wins and one loses. And the next day, they change roles. The same person might lose and the other person might win. So essentially, or the person that was winning, let's say, you know, a long time by being, just because the market played along, he was impulsive. But nevertheless, sometimes the market just gives you money. You could be long, just keep on going long, and the market gives you money. But I really, truly believe that it is still a zero-sum game, because I believe that majority of the money, eventually, there could be temporarily success for some. It will eventually flow to people who do their homework, to people who are actually disciplined, and people who do everything else. So listen, I think zero-sum game is also a timing thing. In the long run, it exists. Day to day, week to week, you know, sure, you know, if you're profitable this week, you might not be the next week. You might not be profitable in futures at all. That's fine. But I don't know what you base your disagreement on. But it's fine. Listen, we can do that. It's just my interpretation. All right, a few more questions and then I'm going to let you go. Okay, Trading Zone, Michael Douglas. Yes, you know what? I don't know if I read this book or not. I've heard good things about him. I heard the guy died recently, but people have really good memories when they mentioned him. So Michael Douglas, what is it called? The Trading Zone. Okay, yeah, I did hear of the book, of course. Okay, so wheat stock. Okay, so SNDL was a wheat stock. All right. Pumped Wall Street bets. Why don't they pump these days? All right. Okay, on the topic, I agree with you. There are bets. There are bets on bets on bets. Okay. All right. Okay. More on the idea that participants are hedging a position or trying to maintain a delta neutral position. Okay, so I understand. So some people, you know, they could be hedgers, right? Or some of them are trying to hedge a position that they have in equities. So they're not always coming to the markets to gain. Nevertheless, if you're talking about people that are using delta neutral strategies, they're still in the same process, whether with futures and futures options. So it's the same game from a discipline standpoint and a mental state. And I keep on saying mental state, and I don't say psychological because, you know, again, I'm not a psychiatrist and I don't want to say things about psychology that I don't know. For me, it was a mental process, improving it. Okay, how different the strategy should be with swing trading, carrying position overnight weekends compared to day trading. If you're talking about as far as decision making, then you're looking at different time frames. So when you're in swing trading, you'll have bigger fluctuations. You should have bigger equity. If you have smaller equity, it will mess up your psychology. This is why I say when you day trade, you day trade. That's it, you know, and do what you're comfortable with. Do, you know, that's what it is. But you might be comfortable with swing trading, but you don't have full margin to maintain it. So the bigger the time frames, like investing, let's go from, you know, trading to investing, right? Investing, if you're looking at a time horizon, for example, like Warren Buffett style, okay? There's a lot more fluctuations in your equity than somebody potentially with a day trading, hypothetically speaking, I should say, because if you lever up and leverage, you know, so again, you know, it's a totally different, it's not necessarily different in a way of thinking from the process that I showed about thinking about the trade, preparing for the trade, you know, thinking about the state of mind. From that position, it doesn't matter what time frame you trade. Diamond futures coming to the market. Okay, no opinion. Listen, I hate diamonds. My wife loves it. I hate it. I think every man hates it. You know, it's an expensive glass. You know, I wish they build more food courts instead of Tiffany's, but that's my opinion. So I'm definitely not participating in diamond futures. Not going to happen. Definitely not long, only short. So, okay, thank you very much for your time. Okay, how do you suggest managing a trading that is going on in your favor and you would like to try extending the gains beyond your target? Do you suggest using a trailing stop after the trade has reached a certain point in your favor? What I would suggest to do is for beginners to work with targets. That's what I would suggest. I would truly suggest for beginners to work with targets. And when you have a sample data of 100 trades, 150 trades, 500 trades, then you can go back to your trades, to the chart, and see when I exited, what did the market do after? Did it extend a huge move? You might find that 75% of the time it moved another 2, 3, 4, 5 points. Or you might say, you know what, most of the time when I got out, the market moved only a little bit up, or sometimes it just collapsed, or sometimes it's just not worth extending the target. So don't think about one trade. You know, everything you do not think about one trade. Trailing stop losses, in my opinion, should be left after you've traded for a really long time. I'm not against it. I don't, and you know, Mr. Torres, I don't know your Ilio. I don't know your experience in the markets, but I would suggest for beginners to work with targets. You stick with the plan. This is what you do. When you don't have a target, in mind, it reduces the odds of your trade. It reduces the odds because you're like, I'm going to enter and I'll see what happens. Okay, I'm not saying you should do targets randomly. Just because you chose a target does not mean that it's going to be implemented, but it's important to do that because if it reaches that target, you know, and you start moving your stop losses, it's a very subjective process of moving it, but you could. It's just, you find, okay, I want to protect this much, I want to protect this much. So in the beginning, I suggest to work with targets. Okay, another question. What are your thoughts on the small exchange? I don't know. I don't do any business with a small exchange at the moment. I wish them well. You know, I guess as liquidity will be built up in that exchange, you know, I'll do it. I want my customers obviously to trade. I did hear about it. I hear it's very small contracts, dollar size and everything else, but I'm only, you know, trading, you know, only liquid markets at the moment. So as they build liquidity and popularity, we'll be definitely looking forward to that. Okay, guys, it's 10 minutes to 6. I want Eastern time. I want to thank everybody who came here. Go to the site, ask questions. Emil, I know you had some questions about order flow and everything else. Ask them on the community site. Ben will help you. Okay, don't forget each day to register your mental state of mind when you trade. I'm going to post tonight the process that we spoke about today that you should pay attention to. And going forward, you know, it will help. You will see, I promise you one thing. After 30 days of going through this process, you will see how much you discover about yourself. That you think you know yourself now, I'm going to tell you this. This is a business that you're going to explore yourself all the time. What's your state of mind? What you thought or anything else? I don't know if you ever found an email, a very, very lengthy email that you wrote to somebody 15 years ago. And you go back to this email and you read it and you're thinking, this was me? I'm not saying you criticize yourself. You're saying, I did that. I wrote that. I did that. I'm going to tell you this. If you are committed to trading, I promise you there is growth along the way. It's good growth. It's interesting growth. It's, you know what? All of a sudden, you're naked. You judge yourself naked from the side. This is what you do. And sometimes you're not going to like it very much. And sometimes you're going to say, you know what? I'm a trader. And, you know, and you're going to observe good things that you do along the way. It's also going to give you a chance to interact. You know, the goal of this community site, the reason that I'm doing it is because I want to build a community that interacts with one another and talks to one another and puts ideas. Even if you have something you want to talk about, post it on the forum. I'd love to hear your ideas. I'd love to hear your good things and your struggles and everything else, because I want to hear it from people who actually trade. So we can develop a community from people that actually reading it and saying, you know what, I'm actually in the markets. I have an account. I trade. Here are my ideas. It could potentially inspire others that are not brought into the market, you know, on hype. How you enter this market, right? You know what my luck was? This is what I was very, very lucky. That when I entered the market, I knew how difficult it is. As young as I was, my mentors, they were so hard on me that, you know, they basically told me things to my face that I was upset, to say the least. I was insulted, upset. And you know what? Those are the only people that I remember now. When I say, thank God they were like that. So I'm not trying to, I'm just trying to be a little bit hard on you guys. So I make myself memorable in your brains, you know, in the years to come. So if we ever part, if you ever move on, you know, you'll say, you know what, at least I had somebody who put me in the right direction. Maybe having a plan in trading will help you having a plan in your business. It will help you having a plan in your personal life. You will not be impulsive. You'll be a thinker and you'll be a skeptic. I'm the biggest skeptic out there, right? I'm going to tell you a funny story, okay? I'm going to use a little bit of a foul language, but bear with me. So when I was in New York and I was building Optimus futures and I moved to Florida, I came to my old boss and I said, any tips, any successful tips that you want to give me? I'm about to run a business. I've never run a business before. I was in my early 30s and I was very, very scared. I said, do you have any tips? He goes, I have one tip. I said, what is it? And by the way, today he owns a very large and successful broker dealer in New York. And he goes, I have one tip. He says, 90% of the shit that comes across your desk, tell them to F off, you know? And basically, as a trader, 90% of the stuff that you come across, ideas and articles and this and that, you know, just be a skeptic, because this is the best advice that he gave me. You know, when you're young, you want to be successful, or at any age that you want to be successful, you might be susceptible to ideas that sound theoretically good, but get those ideas from people who are hard on you, and people who make you work, and people who want you to be successful. And I want each one of you to be successful. And on that note, I'm going to end. Please make sure you go to that forum. I'm going to send it 30 days. Every single day you post it, every single one of you will get it. I will mail it, and it will be a pleasure. That's it for now. I wish you well. Emil, thank you for, you know, staying with us. I wish you a good night. Everybody else, Michael, Ben, Chavis, I think some people already left. So that's basically it. Okay, so all the best, and I'll see you on the next one. And remember, there's a substantial risk of loss in futures trading. Best performance is not indicative of future result. Trade only risk capital. Be responsible. Take care. Bye.